My name is JL Broadhurst, and today I will be taking you through the process and the definition of bank reconciliation. Bank reconciliation is a topic that is initially introduced in grade 11 accounting, following on from debtors recon or debtors reconciliation and creditors recon that is taught in grade 10. So when we start with bank reconciliation, we need to understand what reconciliate or reconciliation means. So in the definition of the word, to reconciliate is to fix something. You know, if we're going to reconciliate with an old friend or someone we've had an argument with, that means we're going to clear the air and we're going to fix any issues that we might have. So when we talk about bank reconciliation, we talk about fixing any issues that we as a business or entity might have with the bank. Now, let me just share the presentation before I carry on. Just put it in presentation mode. Now, what are bank reconciliations? So bank reconciliations, or bank recons, I'm going to shorten the word here, are a monthly comparison of the business's cash records. Our cash records are our CPJ and our CRJ, with the bank's records of the business's transactions. So it's our records, the businesses, versus the bank's records. So essentially, in an ideal world, our records, or our cash journals, and the totals of our cash journals should line up and be precise with that of a bank statement. However, that is not always the case. Now, there's very many reasons for this. Firstly, it could be errors and it could be omissions, which happen quite often, and we need to fix them in order for our books to match up with the banks. Also, there's date differences. So let's say the bank statement is sent to us via email on the 27th of the month, or sent to us however they send it to us on the 27th of the month. But then on the 28th we make a transaction, or we have a transaction that takes place. We would have record of it, but the bank wouldn't yet, because the bank had already sent us their statement. Also, there might be some things that actually took place that the bank has record of, but we don't yet know of. For example, interest. So we know the term interest means, well, instead of meaning, we get interest income and interest expense. So when we gain or earn interest on our account, it's an income that we receive for having money in our bank account. So if we earn interest on current account, we would only get that information when we see the bank statement, because we don't know. It's not a fixed amount that every single month we can be like, oh great, 85 Rand interest. We know we're going to get that, because interest is worked out as a percentage. So we actually wait for the bank statement so we can see the certain amounts and we can record those amounts into our books. So for example, the interest that I was talking about, we don't know about it until we see the bank statement. Once we see the bank statement, we're like, oh cool, we got 91 Rand interest this month, and we go and record it in the cash journal. And the relevant cash journal would be the cash receipts journal, because it's an income. So when I said it's a comparison, we need to make sure that our cash books match with that of the bank records of the business transactions. So cash books with bank statement, basically. So we involve the process of comparing the CPJ and the CRJ against bank statement. Now, what is the significance, the importance of bank reconciliation? So Bank Recon is an essential part of a business's system of internal control. Why internal control? Because it plays an important role in identifying outstanding transactions, also preventing fraud, dishonesty, or detecting fraud and dishonesty, and to basically identify and correct the balances so that our records are up to date. No one says that we are perfectly correct, and nobody says that the bank is perfectly correct. We need to try to find a middle ground where, let's say we think at the end of the month we have 10,000 Rand in our bank account. The bank statement comes and says 9,700, and we're like, let's try to figure out how much we actually have. And then at the end of the process, we figure out, we actually have 9,900, for example. We need to find out what gave rise to these difference of amounts. We also need to verify the deposits and the payments that come, or the deposits that come into and the payments that go out of our accounts. We need to check the accuracy of the records of the business, and the records of the bank must be checked. So we need to make sure those amounts that are recorded in our books and the bank's books are perfect. And essentially, the whole point of this whole process is that the books of the business and the books of the bank need to agree. They need to match and be perfectly the same. So there's various different steps to bank reconciliation. It's quite an involved process, and it's quite an important process. So we're going to start with part 1. This is starting the bank reconciliation process. So the first step is we always want to compare the credit entries on the bank statement, or the deposits on the bank statement, with the entries in the CRJ, in the bank column of the CRJ. Okay, so remember, the CRJ is the book where we record all money that we receive. Then the bank statement, we need to compare the credit entries, which are the deposits. Now, you might be thinking, but bank is an asset and it increases on the debit side. Now, that is perfectly true, but we are not talking about our books, we're talking about the bank. Now, remember, the bank sees us as a liability, because the bank owes us our money. If I have R1 million in my bank account, which I really wish I did, that means that the bank is liable to give me my R1 million. If I want it right now, they have to give it to me. So where a positive bank balance in our books might be will be a debit, on the bank statement it would be a credit, because they are opposite to each other. So again, we compare the credit entries on the bank statement with the bank column of the CRJ. Then we compare the debit entries, the payments on the bank statement, with the entries in the CPJ, because remember, our CPJ is where we record all our payments. So we need to check that the CRJ and the CPJ and the bank statement has all the record of the same transactions. There are going to be items which we see that appear in both places, and then we tick them off. Just make sure that it needs to appear on opposite sides. So we're not talking about the bank T account, but we're talking about the CPJ. So remember, CPJ entries must appear on the debit side, and CRJ must appear on the credit side. So we tick off all the amounts that we see that appear on the bank statement and in the journals. So we look for missing amounts or weird amounts, like one on our CRJ, or in our CRJ we might see an amount of 420, and then in our bank statement we might see an amount of 240. So those are amounts which obviously the digits have been swapped around, so we don't tick those off, because that means there's a mistake somewhere and we need to figure out who made the mistake. And then all the items that we didn't tick off, we circle them, because that means we need to deal with them. Then lastly, and it's not always the case, but sometimes they give the bank recon statement of the previous month. So we need to compare the new bank statement with the old bank reconciliation statement, and we tick off all the amounts that appear on the bank statement that we reconciled for, and then we circle the difference. Because remember, I was talking about bank reconciliation being a monthly process. So if we reconcile this month, and basically the bank recon statement is a statement we send to the bank to say, these are your mistakes, please fix it. So if in February we say, hey, you forgot to credit us with a 7,000 Rand deposit, if in the next month, in March, if they land up crediting us with that 7,000, we say, okay, cool, thanks for doing what we asked you, we don't have to keep reconciling. So we need to always look at the previous month's bank recon statement with the new bank statement to see, has the bank fixed the mistakes we asked them to. Then once we've done all the circling and ticking, we start completing the bank recon process. So we take the total from the CRJ and CPJ that was at the bottom of those journals, and we start a new CRJ and CPJ with those totals. And then we start the bank account with a given balance on the first day of the month. So we draw little T accounts and we put the balance. If it's a bank account, which is an asset, the balance would be on the debit side, whereas if it was bank overdraft, the balance would be on the credit side. We then update the CRJ with any of the circled amounts in the credit column of the bank statement, but we always read the additional information because the question papers usually give us information. They'll say the transaction on the 14th was in respect of blah, 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 blah. And then we read and we say, okay, cool, we should have had record of that. Let's go put it in our CRJ. And the same with the amount in the CPJ. So if there's any circled amounts and we check the additional information and there's amounts that should be in the CPJ, we go and put it in the CPJ. We then total the CPJ and the CRJ and we post these to the bank account. Remember, the amount from the CRJ increases the bank account, so we go put that on the debit side because bank is an asset and increases on the debits. The amount from the CPJ, the total there, will go to the credit side of the bank account because bank is an asset and decreases on the credit side. And then part 3, drawing up the bank recon statement. So the first step is to enter the closing balance on the bank statement on the bank recon statement. So we go take the closing balance at the bottom of the bank statement and we start our bank recon statement with it. If it's a credit in the bank statement, it's a credit on the bank recon statement. Then the circled amounts in the journal, in the CRJ, and on the bank recon statement of the previous month, anything that's circled, in other words, anything that the bank hasn't fixed, it must be once again entered into the credit column of the bank recon statement. So any outstanding money we received, we ask the bank, hey, please will you credit our account with this amount? Then any amount in the CPJ or in the bank recon statements of the previous month must be entered into the debit side of the new bank recon statement, because essentially we want them to minus our account with the right amounts. And then lastly, we enter the closing balance in the bank account. So we balance our bank T accounts and we put it in the bank recon statement on the same side. So in other words, what I mean is if your bank T account has a debit balance, it must go on the debit side in your bank recon statement. It seems weird because everything else you've done is opposite, but the bank account balance, the T account balance, is the only thing that goes into the bank recon statement according to our books and our rules. Everything else goes according to their rules. The bank sees the bank money, the money in the bank, plus in on the credit side, where we would see it as plus in on the debit side. Okay, these were just 2 papers, well, 1 paper that I actually wanted us to go through, but we'll definitely go through it in our next lesson. So before I wrap up, I just want to come back and just conclude what we were talking about. So remember, bank reconciliation is the process of reconciling our bank T account with the bank statement. We need to make sure that there's nothing in our T account or in our CRJ and CPJ essentially that shouldn't be there. We also should make sure that there's nothing that is in the bank statement that should be in our CRJ or CPJ. Often things like interest and bank charges, those are not captured in our journals, so we need to go put them in the relevant journals. Sometimes there can be mistakes like double entries or things like that, or let's say deposits into our account that we haven't yet recorded that we need to go record. So a deposit into our account would be a plus or increase, so we would go record it in our CRJ. Then there's other mistakes essentially that we need to think a little bit harder about. So sometimes amounts appear on the wrong side or in the wrong journal, and we need to go fix those. So the first question you always have to ask yourself when you are doing bank reconciliation is, who made the mistake or who is missing the amount? If it's us as a business, we fix our mistakes in our CRJ and our CPJ. If the mistake is in the bank's hands, we need to complete a bank reconciliation statement. The bank reconciliation statement is essentially a statement that is sent to the bank that says, please, these things need to be fixed. There's these deposits that need to plus our account. There's these payments that need to minus our account. And then other things like these amounts are incorrect. So in other words, you plus our account with 100 Rand, but it should have been 1,000 Rand. So please go plus our account with a further 900 Rand. And then another thing that's very important to remember is if there's a mistake in our CRJ or CPJ balance and we need to fix it, you can't just go and minus an amount from a journal. So let's say they tell us in the balance of CRJ, let's say our opening balance for our CRJ was 100,000, but they tell us 900 Rand was overstated. In other words, we have a transaction where we said we received 900, but we didn't. You can't go minus 900 Rand from your CRJ because it's incorrect practice in accounting to minus an amount from a journal. There's no brackets in a journal like there are on other statements, for example. You can't minus from a journal or tipex from a journal or delete from a journal, but what you can do is you can use the opposite journal to subtract from that journal. What do I mean by that? Is your CRJ, your cash receipts journal, is the journal where we record money we receive. If we said we received a certain amount and we didn't receive it, or we didn't receive that much, we need to go cancel it in the opposite journal, the CPJ. So if we said we received 500 Rand, but we actually only received 200 Rand, we need to go put 300 Rand in the CPJ to cancel out the amounts, because they are opposite journals and they do opposite things to our bank accounts. It's very important for you to remember that in the bank reconciliation statement, we only put in amounts or transactions where the bank has made the mistake and we need the bank to either go credit or debit our accounts. Remember, our books, a debit is a plus, and in their books, a debit is a minus. So all the transactions that appear in our CPJ, which is our minus of our bank account, should be on the credit side of our bank account, but should be on the debit side of the bank statement. Bank statement refers to the bank's books, where bank account and cash journals refers to our books. Great. Thank you so much again for joining me today, and all the best until our next one. Bye-bye.